We're thrilled to have Stuart Allan, who's the CEO of Cedar, to kick us off and walk us through what Cedar does, how they support buyers, who this might be a great option for, and what are the mechanics of buying a house with Cedar and Nestment. And so, with that, I'll let you take it away.
Fantastic. Thank you so much, Matt. Hi, everyone. I'm Stuart. I'm the CEO and founder of Cedar. We built this company to try and make homes more affordable for Americans because that was a problem I was facing and my friends were all facing. And things have only got worse, it seems like, over the course of my career. So we thought that someone had to do something, and we came up with a cool idea here, which I first ran into when I was working overseas in London and Singapore, which is how they buy homes over there in those expensive markets. And I thought, why aren't we doing it here? I think we all know that homes are expensive, right? The median age of the first time home buyer or any home buyer is now 40. First time buyers are a record low at only 20% of purchases. And the median starter home is up to 500,000 or above in many markets. It's becoming very unaffordable, especially relative to incomes, and the problem just seems to be getting worse. So we want to posit a idea here is what if we could cut the price of that home on day one? And that's what Cedar does. So you buy the home, Cedar buys the land. You have two separate deeds now instead of one, a deed for the land and a deed for the house. And Cedar comes in as a partner to cover half the cost, or in some areas, up to 65% of the cost of the home. As a home buyer, you own the bricks and sticks. You can do whatever you want with it. You can live in it, renovate it, knock it down. You own it 100%. You can keep the appreciation, and Cedar owns the land. You pay a monthly ground rent for it, but that's significantly less dollar for dollar than what you pay for a mortgage. Importantly, you can buy the land back from Cedar whenever you want, and all we need is our portion of any appreciation. So it's like co-buying, but instead of sharing one asset and having multiple people on a single deed, we each have our own clear title to our own asset, and that makes it a lot cleaner. So what is the main difference here, and what is the advantage of using Cedar versus buying it with just a mortgage? First, similar to purchasing with a mortgage, you own title to your home. You can renovate it, you control it, you capture the appreciation, and you can sell it at will. But the difference is because Cedar is buying half, you have a lot less cash to get in, your down payment is lower. You can still use Cedar and traditional mortgage side by side. You get predictable monthly payment for the land, which is similar to borrowing money from a bank and paying for it. And you don't have any capital tied up in the dirt. And so when you're leasing the land, you get the same house, the same school district, but at half the cost. And importantly, when you're ready, you know what the price is to buy the land and kind of complete the purchase. This is a product that we built really for the first time home buyer. You can buy a lot sooner than you think because we're cutting your down payment in half. We're up to 65%. We have a big impact, especially in large, more expensive markets and pricey metros, because by cutting the price of the home by so much, we take what would have been a jumbo mortgage and convert it to a conforming. So think about a $2 million home, usually very expensive, well above the conforming limits. You'd have to use a more expensive, harder to qualify for jumbo loan. With Cedar, we'd buy the land for $1 million, and now you're just buying the house for $1 million. So you can use a regular Fannie Mae, Freddie Mac, or other government mortgage program. You get predictable costs with Cedar. And because you're borrowing less, you can qualify for debt a lot easier because you have a smaller loan, which means a better debt to income. One of the things we want to focus on here is that Cedar is a stepping stone to full home ownership. The intention is that you buy us out. And for us, the sooner you buy us out, the better. We make more money the sooner you guys execute that buyout option versus keeping it for the full 99 years. But that's always an option. The buyout is pretty straightforward. We have two options for folks. Most people pick the appraisal linked buyout. And that's very simple. We just need our portion of any housing price appreciation. So if you have $1 million home, Cedar comes in for half, so we put in 500,000, and you buy the house for 500,000. You sell it 5 years later for 1.2. We would get half of that. You would get half of that. Pretty straightforward. That's subject to a floor, where the minimum we get back is our money adjusted for inflation. And it's subject to a cap. If you buy a home and it appreciates like crazy because it's a hot market in a hot area, we don't ever make more than a 6% yearly return on our investment. So any extra returns accrue to you, the homeowner. We also have a fixed rate buyout. This is where we agree on what the appreciation would be in advance. That's used more for folks that are doing large fixer-upper projects or intending to make serious renovations to a home. So, how does it actually work? You can pick any home you want, and we buy it together. So, we would come in and join the purchase contract you've signed with the seller, and we would buy the land portion. So, the seller would sell us the land, and at the same time, they would sell you the house. So, we're splitting title now into two separate pieces, a deed for the land and a deed for the house. Your mortgage lender would finance you on purchasing the house portion, but because it's a lot smaller than the purchase price, that means a smaller mortgage, less monthly payments, and less down payment needed to qualify. But you're living in the same house with the same freedom, same school district at essentially half the cost. So you have options along your journey. As we mentioned, it's a stepping stone, so you can buy the land out whenever you want. Importantly, because you have that option to buy the land, you can sell your home and you can sell it as just a regular property with both the land and the house because you know what the buyout price is. Or you can sell it as a leasehold, which in some markets, especially in some market conditions, can help the home sell a lot faster. Also, you can refinance the property whenever you like, just like a mortgage. So if rates drop a bunch, you can buy us out and use cheaper prevailing interest rates to do that. So there's no surprises, there's no balloon payments, there's no prepayment penalties. We try to make this as simple and straightforward as possible. Matt, maybe you want to talk about how Cedar can act as an additional option here for folks who are working with Nestment coaches.
Yeah, I think the way that Cedar fits in, slots in, is when we're running up against how to make this work. How are we going to get you into the house that you want? And so sometimes it is the case these days where we have buyers who they have their eye on a neighborhood, the type of property, how they want to get in, but it's just like we can't make the math. And looking through first time buyer incentives, looking for what programs a specific lender might have, county, state, federal, first time home buyer, just thinking through how can we get you into this house. I think this is where also, hey, let's look at leasehold. Let's look at co-buying. Do you have a rich uncle? How would we structure that? Just thinking through the next checklist of what can we do to get you in. And that's where, hey, let's exhaust all avenues. That's usually where Cedar fits in. But I think by having so many people here today, there might be some folks that want to lead with this and it makes sense. And they're like, hey, let's find out if there's a way that I can get in and my payments are going to be lower. And it seems like this is my stepping stone toward my forever house. This could be a place where Cedar fits. That's kind of where I go. What do you think, Stuart?
Yeah, I think that's great, Matt. Co-buying, for example, is a wonderful way to get into a home. But co-buying means having someone that you trust to own an asset. And that can be tough. Everyone here has done group projects at some point, either at school or in their career. And everyone knows how difficult that can be, even if it's someone you get along with. With the Cedar model, because we each have our own title, you have title to the house, we have title to the land, there's very clear governance and there's no complications or issues. And so you get all the power of co-buying, of cutting that purchase price in half or up to 65% in some markets without the complication of sharing ownership of an asset.
We will all interject also right now with a question from Jacqueline for first time buyers. How does this change the calculus of qualifying for first time buyer incentives or even just the pre-approval process?
Yeah, that's
I'll
a great
take your
question.
answer as I let my kids into the house.
So Cedar works with Fannie Mae, Freddie Mac, FHA, VA, lenders. Any kind of regular can use Cedar. Now, some lenders may be more or less familiar with a leasehold process, but every lender in the US that works with government mortgages, which is the majority of them, can work with Cedar. We work with large national lenders, think your Wells Fargo, your Bank of America, your Fairway Independent Mortgages, et cetera. And we can also connect you with lenders that we have good relationships with as well if you don't have one. It makes it easier to qualify for the home you want because you're buying less of the home. You're getting just the housing component. So think about, just for round numbers again, that $1 million house. If you can really only get pre-approved for 800,000, that would be outside of your budget. With Cedar, that home is now back inside your budget because it's not $1 million house anymore. It's Cedar buying the land for 500,000 and you buying a $500,000 leasehold. And so you're able to qualify for homes that you want to live in now. The other way we think about it is if your advisor is saying, hey, if you keep saving, you might be able to afford the home you want in 4 or 5 years. With Cedar, you can get that home right now. And so we're able to pull forward consumption because you're buying the housing component while Cedar buys the land. And in 3, 4, 5 years, you can kind of complete the purchase by buying Cedar out.
I'd say, just to put a cap on Jacqueline's question, probably in a scenario we would have the buyer already working with a lender, and so then it would be introducing kind of Cedar as another layer on top. Okay, what can Cedar do? How can this help me get in? And then, just to give you a heads up, Sarah, I see your question and we're going to get there.
Yeah. For Sarah's question, I see here on taxes, it's the same as if you finance a house with a debt. If you get a 97% down, sorry, 97% loan on a home and only put 3% down, it's not like the bank is now going to pay 97% of the property taxes. You're still responsible for that. And that's the same thing with Cedar. Even though we own the land, we're just here to help finance the property for you. So we would pass through those taxes to you because we don't get to use the land, enjoy the land, or otherwise make use of it. Awesome. So let's jump into kind of a real example. So this is an actual Cedar transaction we're doing in Lutz, Florida. This is an exciting one. It shows a few different ways how Cedar can help not only with down payment, but also on the monthlies. So this is a $1.3 million home, and Cedar is coming in for 460,000. So that means that the price the homeowner is buying, it's no longer a $1.3 million home they're trying to pay for and qualify for. They're just trying to afford the $850,000 leasehold. So same house, same school district, but a much lower price because Cedar is buying the dirt. To join the transaction, we're also participating by having what's called an assignment fee. And that's when we join the transaction with the home buyer. We actually pay the home buyer some money, in this case, $93,000, to join the transaction as Cedar. And those are flexible funds that the home buyer can use for their down payment or to reduce their monthlies. In this case, the home buyer decided to use that to reduce their ground rent for the first 7 years to help them qualify for this home and have a lower debt to income. So in a traditional purchase, they'd have to have a $1.3 million home. They'd put down $265,000. They'd borrow $1 million, and they'd be paying $6,700 a month, assuming a 6.5% mortgage. With Cedar, same math, $1.3 million home, except Cedar is paying $460,000 for the land. The down payment's now a lot lower. Instead of $265,000, you only need $170,000, so 35% less on the down payment. And then we're able to use that assignment fee as well as the ground rent, which is a lot less expensive than the mortgage, to reduce the monthly housing costs by another 20% to $5,400. So not only do you have a 35% lower down payment with Cedar, you also have a 20% lower monthly payment.
Stuart, just a clarifying question here. That assignment fee of $93,000, that comes out of what Cedar would have paid the seller for the loan.
Exactly. Yeah. Exactly, Gordon.
Okay. Awesome.
So let's kind of get to some questions and open it up to the floor. So these are some common questions we get. A common one is, am I just renting? And the answer is no. You own the bricks and sticks and you're leasing the land for 99 years. So you have an asset that you own, you're on title for, you can get a mortgage against it, but you're borrowing or renting the land portion. And you have an option to buy that land whenever you want at a preset value. Another common question we get is, what is the ground rent? And so it's a monthly payment for that land, just the same way as you have a monthly mortgage payment. And it's a lot lower on a dollar for dollar basis than what your mortgage payment would be. But the catch, if you call it that, is it'll go up every year with inflation or 2%. So whatever is greater. So if you're paying $100 last year, inflation was 2%, you'd pay $102 the next year. Importantly, as we mentioned earlier, you can sell or refinance whenever you want. And so that makes it easy to either get out of the transaction through a refinance or to market the house either as a leasehold or just a regular home for folks, improving the marketability of the property. Another question we get, is Cedar a lender? No, and this is an important one. We're an equity buyer. So we're buying that land with equity. And so we're not debt. You never have to pay us back. If you want to just continue for the full 100-year lease, you can do that. And that means that when the bank is considering you for debt, Cedar isn't included in your debts that you owe as an individual. And so if banks are looking at debt to income or total debt on your kind of personal balance sheet, Cedar isn't included in that. That's particularly attractive from folks that are doing investment properties or things like that. And then finally, what is the land cost? As mentioned, we just need our portion of any appreciation. Here's a fun one from Jacqueline, or sorry, Sarah. Let's go from top down here. So, does the land rent help to reduce the balance of the total land costs? Yes. So the idea is that the land rent is at a much lower rate than what your mortgage would be. So mortgages these days are around 6 to 7%.
Could we back two
Yeah.
slides so we're looking at the numbers of the breakdown while we're talking about, yeah,
Yes.
great.
Yeah, the ground rent is significantly lower. Our costs are about 250 basis points, so 2.5% above where treasuries are, or certain types of treasuries called tips. And so that means our costs are around 4.5 to 5%. And that's with no amortization because we're not a mortgage. You don't have to pay back any principal. And so that means on a dollar for dollar basis, we're about 40% cheaper than borrowing the money from a bank. And so it does help reduce the costs rather substantially and improve your debt to income or your buying ability. So Jacqueline, how does Cedar handle a first-time buyer who needs to sell within 2 or 3 years? The appreciation is zero, then the appreciation is zero. We just need a minimum of our portion of the appreciation or our money back adjusted for inflation. If the goal is we want to win together, and if there isn't any appreciation, we lose together too, subject to that minimum of us just needing our money back adjusted for inflation.
Back to Sarah's question. She's got a couple of questions actually. So one is just clarification on the traditional purchase, 1.325 million for the taxes and insurance. The home buyer is paying the taxes on the $1.325 million property.
Yeah, that's correct. As I said, it's the same way where if you borrow 97% from the bank, it's not like the bank will now cover 97% of your taxes.
So just working down, does the land rent help to reduce the balance of the total land costs?
Yeah, we just covered that one, so I'm okay on that question. Sorry.
So one of the things that I want to just understand here is that with the land costs, so that 93,000 is reducing our land rent for the first 7 years,
Yep.
but then after that, it's the full balance.
Yeah, which would be here it is, 1,520. And so that's similar to a mortgage rate buy down, where for a period of time you can have a much lower mortgage rate. And the intention there is this is a tool for people to help qualify if they have issues with their debt to income. So it's a little bit more of a complexity. We don't do it on all of our deals, but it is a very useful way to use Cedar, similar to using a rate buy down to help folks that are struggling on that DTI part of the equation or debt to income.
Do you think that is a way to think about this, that this is a should buyers have some sort of exit strategy? Within 7 years, this is something, a way to either get into that first house, get some appreciation, and then get out within 7 years? Or is it that after that 7 years, hopefully the things that are lining up in your life are going to put you in a position where you're going to be able to buy out? Because I just wonder if it like getting to a point where now after 7 years, my monthly housing price is ballooning and is bigger than that 6,700. I wonder if that's one of the things that going into it you should try to avoid, or is that just
Yeah,
a
that's
cost?
a great question, Matt. So we don't have any balloon payments or anything like that. The rent only goes up with inflation. If you look at other housing costs, your property taxes, your electricity bill, your water and sewer, all those historically go up at a rate higher than inflation. Housing costs do go up with inflation. That's what inflation means. And we're just wanting to keep our money adjusted for inflation. But traditionally, again, will be the lowest yearly increase when you compare us to other housing costs like electricity, water, sewer, garbage collection, property taxes, et cetera. And in terms of when people buy us out, the sooner they buy us out, the happier we are as a business. But it really depends on what other opportunities they have for their money. Housing is a great investment and it's something that we all need. We all need a roof over our head. But there's other uses for people's money too, like the stock market or starting a business, et cetera. So some of our clients will want to buy us out as soon as possible, and others say, I'm happy I get to live in $1 million home that I only paid $500,000 for, and I have a better use for my money than buying the other half.
Are there
So
any
it's
market
flexible.
are there any markets where buyers can't utilize this product?
Only Maryland. And
Only
that's because
Maryland?
Maryland, yeah. Every other market we operate in.
Ah, you missed it. Everybody here is from Baltimore.
Oh, look, we love Maryland. They just have some regulations that require us to build a custom product only for Maryland. And we're focusing on the other 49 states first, but we'll get there eventually. Great question on can my monthly rent payments be reported to credit bureaus? Sure, we don't do that currently, but we'd be happy to set that up if any client wanted to. Generally, we're like when you think about paying the ground rent, it's like a HOA. Most HOAs don't report your HOA payment, and that's the same with us. We're not included in your mortgage escrow, and so we're usually not included to credit bureaus. But again, if someone really wants us to, we can figure that out.
Okay. Three new questions. Read Jonathan Bergquist's.
Yeah, so the rate is 30-year tips. So nowadays, I think that's 2.4% plus 250, give or take. It depends on the specific home, but the 250 is a good rule of thumb. That would get you to 4.9%. And that's with no amortization because again, we're not debt. You don't need to be paying back any principal. And so that means the monthlies are substantially more attractive than a traditional mortgage.
So speaking of traditional, so for someone who's going to be utilizing this isn't an investment product, or can it be?
So yes, we do work with investors, so short-term rental companies, single-family rental investors, and folks find it very attractive to use Cedar because it reduces the amount of equity they have to put into a home. If you're buying an investment property or a second home, for example, typically you need to be doing 25% down, not the products that are 20% or lower that are available for first-time primary residences. And so if you want to buy a vacation home or buy a short-term rental property, Cedar is a great way to reduce the cost on a monthly basis and reduce the amount of equity you have to put in.
What about how you calculate the assignment fee?
Yeah, as a rule of thumb, it's about 20% max. what's the amount that Cedar is putting in. So here in this example that's up on the screen, we put in 460,000 and the assignment fee is about 20% of that, 93,000. That's about the cap. It can also be less than that. So 20% down to zero. It depends on, think of it as like a sliding scale. It depends on what the homeowner needs. So we can set it to zero if that helps the homeowner most, or we can set it to a max of 20%. And that's set between us and the homeowner as we're figuring out the deal.
I love this question from Tiffany that let's say in 30 years we've paid off our house and we have no more mortgage. We want to pass it on to our kids. We could
Yep.
pass on the bricks and sticks, but the land lease is still there. And so they're going to pay that, or there's going to be inheritance to pay it off.
So the ground lease is fully transferable. So you can pass it to your kids, you can pass it to a trust, you can move it wherever. We don't have any ability to stop or control any transfers. It's a freely transferable product. It's your deed. So you can sell it to whoever you want. There's no additional credit checks on who the buyer is or who you're transferring it to, because you fully own the deed to the leasehold, just as we fully own the land. And there's no controls between us other than the land lease agreement. In terms of what happens in 30 years, it's a great example. Going back to that $1 million home because it's a simple round number. So you've been living in $1 million home for 30 years, you want to pass it to your kids, but you only paid 500,000 for that home. So you've got decades of benefit. Ideally, it's appreciated a lot. So your 500,000 has appreciated and so has ours. And so if you want to buy us out, you're just essentially completing the other half of the purchase. But you've been winning with appreciation at the same rate we've been winning at appreciation.
Yeah, I think that's a good point to make there, is that it is a stepping stone to full ownership, full home ownership, and it just takes a few years through HPA and delevering the mortgage to get to that level.
The important one is, and we talked about refinance earlier, is that most of our customers buy us out within 7 years. And they do that by simply refinancing the home. So they've been paying down their mortgage for 7 years. They can refinance back up to an 80% loan to value. So increase their mortgage amount again and use that increase in mortgage to buy Cedar out without having to put any more money down. Sarah asked a question about landscaping. We don't count any of that. You can do you want with landscaping, pool installation, plumbing. You want. The only restrictions we have is if you want to change it from residential. So if you said, I'm leasing this land and now I want to make it a gas station, we would have a problem with that because you're trying to change the use of the property away from residential. And so we'd have to talk about it. But as long as you keep it residential, whether that's single family or multifamily, that's perfectly fine. You can have a home office, whatever is permitted in your local residential building codes. It's just if you wanted to make it commercial or industrial is where we'd have restrictions and we'd have to talk about how to best do that.
But just to chime in on that, Stuart, yeah, so ADUs are okay, additional structures
exactly. If
already.
it's permitted under the existing residential codes of that area, you can go ahead and do it. The reason for that is sometimes when you change something from residential to commercial or industrial, it's very hard to get it back to residential, and that could impact our value of the land.
More questions. I think we've reached the point where you could also unmute yourself and just ask one.
Ronald just asked the assignment fee. This is an additional tool we use to help homeowners reduce their monthlies or reduce their down payment. And the idea there is when Cedar joins a transaction, you've done a lot of work to find that house and get it under contract. So we're paying you up to 20% of our total commitment to the property to join that transaction. And you can now choose to use that money, the assignment fee, either just having it go to the seller, so further reducing the leasehold price you're buying, or in the example we have up here on the screen with Lutz, they decided to use it to similar to a rate buy down to reduce their monthly rent. Yes, the fee is added to the land rent balance. What you need to buy us out is just our total outlay. So again, if we put 50% into the deal, you would need to pay us back our 50%. The fee is really just a legal structure to give you more flexibility.
Is there any flexibility or negotiation that a buyer can bring to Cedar to try to figure out the percentages and who owns what?
Not really. We can go less than what we say, but when we underwrite, we're trying to give you the best deal possible. So if we say, hey, we can go up to 50% on this home, that's the max we can do. If you want to do less because you don't want to sell as much as the land, we're happy to do that. But when we start, we operate with the best amount we have here. And so, yes, the assignment fee is flexible cash at the closing table. You can use it to reduce the leasehold price. You can use it for your down payment. You can use it for a rate buy down. You can use it to buy down your ground rent, and you can use it for closing costs. Minimum down payment is the same as whatever loan program you're using. So if you're using an FHA, it's 3%, but it's 3% now on the leasehold price, not the entire home. And so that's the attraction, right? So again, $1 million example, you're doing a 3% FHA. Usually you'd have to put down $15,000. But with Cedar, if we're buying $30,000. But with Cedar, if we're buying the land for 500,000, now you only need to put down 15,000 minimum for that $500,000 leasehold. You're not borrowing against the land. We're an equity partner, but yeah, you're financing the land portion to get that money up front. And it's equity in the sense that you don't have to pay us back. You can choose to let it ride for the full 99 years if you want. And that's a difference from borrowing. Yeah, you're putting in half the equity, we're putting in the other half. Exactly, sir. The assignment fee is not a repayable loan because you don't have to actually repay it. Again, you can let the leasehold go for the full 99 years. But if you do choose to buy us out, you're buying us out based on our total outlay, which includes the assignment fee. Yes.
Did you answer Luis's question?
Great one. Sorry, I missed that, Luis. My apologies. Would Cedar ever sell the land deed from under a homeowner? So the land deed, just like your mortgage, is fully transferable. We have different investors, pension funds, life insurance companies, etc. And they're the ones that are actually buying the land through our investment fund. Just the same way that when you have a mortgage with Bank of America, the mortgage ends up in a mortgage-backed security or with some investor somewhere. It usually doesn't stay on Bank of America's books. But what's important is who owns the land doesn't matter because all your rights as the leaseholder of the owner of the house don't change. Those rights are like the stone tablets, right? They're set there in stone. So regardless of who owns the land, it doesn't impact your experience as a customer.
And then Stuart, in terms of actually servicing the ground rent, how does that work? Where do you pay?
Yeah, so it's just an HOA. We have a payment portal. You log on and you pay the payment portal. Some lenders do want it to be as part of the mortgage escrow. So you would just pay the ground rent. At the same time, you pay your property taxes and mortgage payment to the lender. It depends on who your mortgage.
Gotcha. And that payment portal, that platform doesn't change no matter who owns the title to the land, whether it's Cedar or another investor. Okay, great.
Yeah.
What else you got, folks?
I'll go live for this one. I just wanted to circle back, Stuart, on changes to the land, additional structures and things like that. I know I'm in the city of San Diego. They have very strict building codes and generally, especially for land ownership owner sign off for permits and things like that are required. How do you guys handle things like that in tricky cities like San Diego that do have strict building code?
Yeah, so it's still up to the owner of the house. We're not really involved in any of that process. Typically, a mortgage lender is going to be a lot more strict on what you can and can't do to the home as the debt holder on the house than Cedar is owning the land. So we don't need any permissions or anything like that. If you want to put a pool in, you go about the same building code, permit and permitting process that you would otherwise do if Cedar wasn't involved.
Are there any credit requirements for utilizing Cedar?
No, Cedar is just looking at the asset. So there's no credit requirements on Cedar. Now that changes a little if you're an investor, but if you're getting a mortgage, we rely on the fact that you can get a mortgage.
I have a question. I do a lot of business with builders here in Houston,
Yep.
and I presented the writer to a couple, D.R. Harden, Meritage, Perry. I get a lot of pushback. A lot of these builders don't like to use outside writers. Have you guys addressed that with new construction?
Yeah, we have. So we have relationships with the C-suite over at Lennar and D.R. Horton. And so we're working with those large new builders to get the right level of connectivity. So they say, oh, it's a Cedar deal. Yes, our corporate attorney has already looked at it. And that's why we keep our riders standard. So it doesn't matter if you're in Houston or San Diego or Jersey City, it's the same rider. And so with these large national builders that are usually pretty inflexible, they just need to approve it once at the national level. And then we just usually need to connect the local representative with our national point of contact for them to say, hey, we've already reviewed this at corporate and we're good to go.
Are those measures have been taking place already, or?
Yeah, it depends on the builder. Horton, we're good with. Lennar, we're good with. Suteshi, we're good with. And then a few others we're still in the process with.
Okay, got you. Thank you.
Thanks, Bernard.
Yeah,
Oh,
that's a great question. So if Cedar closes and we own the land, it's just the same as if your mortgage lender closes and they have the mortgage. The asset is just transferred to a new owner. And that's because it's fully transferable. It's similar to if you are on an HOA and the HOA closes, a new HOA would come in its place. So there's no financial impact to you or assessments because we've separated the deed. And so there's no risk between the two separate assets. They're completely independent of each other. And that's very different from co-buying. If you're co-buying and you have someone else on the deed, if they run into financial trouble, that can mean trouble for you. For Cedar, because we have separate deeds, there's no risk if you as the leaseholder run into trouble, doesn't impact our land. Similarly, if we run into trouble, it doesn't impact your leasehold and your rights under that contract. Have you seen sellers or lenders deny Cedar land deeds? Yeah, we have, but it's no different than, sellers, not lenders. For sellers, we have, but it's no different than them saying, hey, we don't want any financing on the transaction. We want an all cash offer. So we have lost offers, but we've lost them to all cash deals. And that's similar to if you came in with any financing offer, some sellers will pick an all cash over a financed offer.
do you, Stuart, want to make your closing pitch?
Yeah,
If
absolutely.
if you're in the market for X, Y, and Z, you should contact Stuart and Gordon.
Yeah, absolutely. If you want to learn more and you're already working with a Nestment coach, you should totally ask them and we can help. We also have Cedar Home Advisors who we can walk you through any deal and go through some numbers. You should reach out to us if you're looking to buy a home and you're looking to get into a home now that's currently difficult for you to afford, or you just don't want to spend that much money on a specific home. We can come in, we can partner with you, and we can buy up to 65% of the property price to help you get into that home now, and you can buy us out whenever. GetCedar.com is our website. You can qualify there. We have pricing calculators, fun things like that. All these other kind of questions we have on our website. We have materials to walk you through, and we have helpful home advisors who can answer any questions. I noticed you asked one more question: how do banks treat these? So from a bank's perspective, this is no different than a condominium. When you lend against a condominium, The bank just has the box in the sky. They don't actually own the land underneath the condo. That's owned by the condominium association. So banks have different protocols for a leasehold, just as they have different protocols for a condo versus a traditional house. But if you're a Fannie Mae bank, a Freddie Mac bank, FHA bank, or a VA bank, they all do Cedar deals. Awesome. Thank you all so much for the time today. It was great to be able to talk with everyone. And if you have any more questions or thoughts, our team is all here and happy to answer. Tiffany question. Yes, Sarah, as mentioned to Tiffany, if Cedar has to close, the asset continues with no changes from your perspective, and simply some other owner of the land would buy Cedar's assets. Just the same way that if you have a mortgage from Bank of America and Bank of America had to close, some other lender would purchase the asset and take the place, and that doesn't change your mortgage terms or the nature of the contract. Standard closing time for Cedar is 30 days. Depends on just one item, which is who you want to use as a title company. If you're using one of our title folks that are familiar with the Cedar transaction, we can close in as fast as 15 days. If it's a new title partner, we're onboarding them for the first time, and this is the first leasehold deal they've seen, we like to ask for 45 just to make sure that we have all the time to train them and answer any questions they have. But generally, we close on the same closing timeline as any other deal. Most of our deals that have run long, it's your standard residential closing stuff where the surveyor wasn't able to come in time, or there was something found in the home inspection, and so the seller and buyer were negotiating longer, etc.
All right, I'm gonna cap it and say, for those of us who are also new to Cedar, new to Nestment, please reach out if you have any questions. We're happy to answer any questions you have about your home buying journey, whether you're a first-time buyer, whether you're trying to think about your next moves, buy an investment property, buy a second home, buy your first home. There's a lot of resources out there. And that's why we're set up as Nestment home buyer coaches, that for this process, it could be a complicated and intimidating process, but we can say that through education, information, and structure, it could be a empowering and joyful process. And so if you do have any questions, if you want some help, you don't have to do it alone. Reach out to Nestment. I'll drop my email is matt@nestment.com, and we're happy to help you with anything. And look out for some follow-up emails. Thank you so much, Stuart, for being here and introducing a concept that I think for a lot of us is pretty novel, even though it's been around for a long time, and adding this to our toolbox for how we can get into a new home. So thank you so much, everyone, for being here.
Thank you, everyone.
Thanks, everyone.